Good day, fellow investors. As promised, this is a business, a kind of business that I really like. This is the perfect Sven Carlin type of business, and I'm really excited to share this investment with you because this really shows what this channel is about, what I am about when it comes to investing. Imagine owning something like this. Of course, one part is the business, the other part is the price that you have to pay for it, but it really makes you think about what kind of an investor you are. Owning this is really interesting. Of course, there is a moat. Small company, we could say it's a seize candy Buffett type of investment because they can increase prices over time, they have limited capacity, and they can just by tweaking the operational performance there, the execution, increase the margins, make more and more money. The stock I'm talking is Jungfraubahn Holding AG. It's traded in Switzerland. It's a small market cap of 800 million. It doesn't have that much volume in a day, but okay. And I just wanted to share it because it's a really nice company. As you can see, why it's a nice company, it has just been slowly and steadily compounding. There is some volatility depending on crisis and expectations and investments, of course, COVID, but if one follows this, perhaps at some point in time you can get it at the price that fits you. We'll do later the valuation. To give you a sense of where this is, the top of Europe, Jungfraujoch, in the center of Switzerland, so close to Bern, Wengen, I think they should have had skiing there, Interlaken. So if you want to own a part of Switzerland, this is an idea for you. And this is what they own. They are these railroads that bring you around, boats, ferries, parkings, and the cableways that bring you up to the mountains, which is very interesting and attractive attraction, especially for Asian tourists that go up and down all the time. And as Asia is growing, it's also an Asian investment in Switzerland. Very interesting. Let me show you the fundamentals. So again, something that I like, very low debt. The total equity is 600 million Swiss francs and the total assets and liabilities is 756, which means the total debt is 150 million on 600 million of equity. And of the debt, 60 million is current debt, liabilities, deliveries and services. They have invested a lot into the new cableway, but again, something that shows about something that tells me that is a business I like, low debt, because now there is COVID, crisis, all the companies that were high in debt really had their troubles and they were bailed out, we can say. And this was a very hot stock, and yes, it rebounded from the bottoms, but this was already bad, and then it still didn't rebound because, of course, of the debt and the uncertain business situation. So a mountain might give a better margin of safety, a moat because nobody can build a new mountain on your mountain or build new things here, especially in Switzerland. So it has a moat, low debt, stable business, making money. They are around EBITDA 100 million, EBIT lower, but operating income has been growing slow and steady over time. As operating income grows, annual profits grow even more. 2019, so in a good year, they make around 50 million per year. Of course, 50 million compared to the market cap of 792 million is not a great return. We are at 5-6% plus 1-3% of growth, and we are still below my threshold of 10%. But I just wanted to share a beautiful business. For now I have better, but then another business that I'll watch over time, follow the conferences, the news, annual reports, read, learn more about it over time, and then see whether somewhere in the next 10 years it will fit my portfolio. This is a quick valuation, 8% discount rate. We are at an 800 million valuation, so okay, with the dividends being paid out and then growing faster as they pay down the debt at a 4% dividend yield expected. So nothing wrong, good business, 8%. There are many good businesses that give between 5 and 10%, so you have to see how it fits your portfolio and what are your requirements. But there are also risks. The Swiss franc, if the Swiss franc gets stronger, on one hand you make more money, but on the other hand, going to Switzerland might be more and more expensive for tourists, and the place is already expensive because it is packed often. They will try to change prices depending on the season now, so they try to tweak those things. But yes, it is a risk. And then again, if I put it into my comparative table, you see also discussed grocers yesterday. So we are there with good long-term returns, but not great returns yet. So you have to see how this fits your portfolio. I hope I have shared with you something discussing the key investment fundamentals, what value investing is. It doesn't really have to be value like a bargain or something, but think of moats, of the quality of the business, of what you are owning, of the integrity of the management, etc. And I'm very happy to follow this company, learn more about it, and then see whether sometimes, somewhere, given the cycle, given whatever might happen in Europe, it will give me the best returns. It will be in the top 5 of my portfolio, and then I might consider really heavily adding to my portfolio. Thanks for watching. Looking forward to your comments. Let me know what you think of this company, and if you have more of such companies, please share them in the comments below so that I can look them and add them to my watch list. Thank you, and I'll see you in the next video.